Gold traded bearish last week before recovering towards the end of the week and closing in green. Yes, it has bounced back from the support levels previously. 1905 provided it a good support, and then it has a close brush with 1900 levels, the psychological levels, as we discussed in our last week's review for gold, and close the week in green. So now what to expect from gold next week? Is it going to recover from here? Is it going to reverse from here? Or we can again expect a bearish week ahead? Which position you should take in order to profit trading gold next week? We will see with the help of charts first, followed with indicators, and towards the end, I will give you the trading levels and strategies. So do watch till the end, listen it carefully, and note down the. And yes, before leaving the video, just press the like button, do share across, do subscribe as well. And your every comment adds so much of meaning to my analysis. So do like and comment. With that, let's start. And yes, before we proceed, if you want to get the live updates, press the bell icon and join my free Telegram channel where you get the live market updates. Now, let's have a look at the daily charts. On the daily charts, see, gold has achieved lower lows here, and with 1985 as a double bottom level, see double bottom here, then this retracement, and right now it is yielding higher lows. Clearly we are getting a reversal signal. In the daily analysis, I have clearly mentioned that as long as 1910 gold stays above, you should stay long. And see 1930, now 1930 is a greater resistance, 1930-32 zone. You can see 4 candles getting reversed from the same levels. So next week, if you see gold staying above 1932, you can treat this as a breakout. See, this is a flag formation out of this retracement and bullish channel. So this is a flag formation. If gold stays above 1932 next week, you can stay long. I will look forward to 40-50 zone double top levels. If it stays above 1940-50, just stay long in gold. We are looking at 1980 levels here. 1980-82, this time is going to be a great resistance, and it is also an achievable levels. Now you can see why 1980-85 zone is a great resistance. You can see here multiple candles getting reverted from the same level. Thus we have to remain careful of these levels here. This is not only with the price action but also with the technicals. 1980-85 zone is going to remain critical. So this is the first observation. Yes, it is right now forming a flag and it is willing to give a breakout. So stay long above 32. That is very clear. At the same, see, this is coming after a double bottom levels here, and with that as double bottom, it is trying to reverse. Now another observation here, if you look at the long term, you will find it is trading in this bearish channel. Thus it has to stay above 1940-50 zone. In any case, that is going to be a first and very strong resistance, near term double top levels as well, and from there we can see a complete reversal. So this is going to be important. Yes, it is staying in this bearish channel. Right now it is trying to reverse from not achieving the bottom of the channel, and this is a good bullish sign. At the same time, as long as the top of this channel is not breached, we should not be treating this as a bullish reversal. Now another point to add here on the daily chart, see if it reverses from here, you can see it as head and shoulders here almost. You can see this. So this is inverted head and shoulders, and a recovery from here can be equally very strong. So we have to be watchful here. We have to be careful here. Yes, a reversal sign is seen on the daily charts, and possibly it might continue as long as it stays above 1932 levels first, then 1950 levels second. If these two levels are breached, certainly bullish momentum is going to prevail in gold. At the same time, below 1910 and 1900 is where the bearishness may prevail, and this time if it breaches below 1900 levels, we can look forward to 1870 1860 zone as well. This is something you should watch for the downside. Now let's have a look at the week. On the weekly charts, triple bottom here at 1600. Since then, bullish momentum. This is the bullish channel in which gold has traded for weeks. See, rise retracement. This time it has breached the channel. This is the long term channel. See, we are taking from last 1 year, this one, triple bottom levels. Also, if you look at after the retracement, the rise, and now if you consider this is a good pole, see, vertical and gradual. This is always important. Once you see the rise is bullish and the slope is gradual, it still suggests that there is bullishness, and that is why we had discussed again and again in our analysis, as long as 1800 is not breached, we are going to be careful with gold. Yes, below 1800 is where the bearishness might prevail, though if it continues its downside movement, you can see there is a gap here to be filled at 1870-60 zone. it may try to attempt and achieve those levels 18, 70, 60 and 50. These are very, very good support, and on the downside, as long as 1800 is not breached, we should not be treating this as bear. Also on the weekly charts, if you look at, yes, this could be one formation. See rise and retracement here, and hence a breakout is what you should look for. Any move above 1985 should be treated as a bullish reversal. Now let's have a look at the last week's formation. What has happened last week? You can see double bottom here, and this also we discussed that double bottom is definitely a stronger support levels. You can see it is retracing here from the higher lows. So next week, if it stays above 1932 and then 40 levels, yes, these are three critical levels. As long as 1950 is breached, as long as 1950 is respected, we have to be careful. Beyond that, we are going to treat this as an extreme reversal, and possibly strong bullish momentum may prevail here. Do not think of selling gold. Once it stays below above 1950, do not think of selling gold. As long as it stays below 1950, we have to remain careful. So the probabilities here, yes, it can form double top and reverse and stay in red. That is one probability. Second is it can break out on the upside, continue the upside journey, 1940-50 levels it tries to achieve, and might get resistance at around those levels. So this is another probability here. So now this is on the weekly charts. We have seen that it is trading in this bearish channel. We have to be careful as long as 1950 first and then 1985 levels will be seen. Now coming to the monthly, what has happened on the monthly charts? Lower highs, higher lows, trying to consolidate. So far it has failed to breach the lows on the downside. 1900 levels again proving out to be a great support here. You can see only one monthly candle breached there on the downside. At the same time, lower highs here. So yes, 1950 zone becomes critical, then 1965, then 1985, and beyond that a complete reversal will be seen. Also on the monthly charts, if you look at rise, retracement, flag formation, a breakout is what I will look forward to. This will be the sign of the reversal, and then we may see it breaking past on the upside in the coming months. Now let's have a look with the help of it. Now see on the monthly, you can find out the prices are divergent from the moving average. Moving averages are staying one over other, and this is a bullish sign. It tried to attempt and achieve the levels, right now shying away from achieving the levels. This is right now stationed at around 1870 levels. See 1870 levels, also it is a gap level which needs to be filled, and this is a great support. So for the month we have to remain still watchful here, and if the candle closes in green, then only we should think it of as a reversal, else there is a probability that it can try to achieve 20 period moving average, bridge the gap and continue from there onwards. See stochastic on the monthly charts is looking down. At the same time, look at MACD. See MACD is trying to converge and it is trying to cross over for a sell, but remember it is still in green. And if you look at this complete cycle in 4 to 5 years, gold has completed one cycle, and after 4 to 5 years it is just crossed over, so it might stay. Now what has happened here is, see divergence was more, and with couple of red candles it is trying to converge. It has not yet crossed over. It can still continue on the upside with the divergence with the bullish candles in the coming months, because this crossover, bullish crossover, has happened after almost 4 to 5 years. It might stay here for a while. And if you look at the formation here, see the rise, retracement and consolidation, again the rise, then higher lows, and now again looking upward. So yes, in the coming months probably only thing is to watch it for September and October. Beyond that, certainly a breakout can be expected. RSI comfortable here. Coming to see the price is completely stationed between the 20 and 50 period moving average. Also one must note that the prices were divergent here from the moving average. It is converged, taken the support from the 20 and 50 period moving average, consolidated here for long, just let it give a breakout, and then the bulls might take over. Yes, right now it is stationed beautifully between the 20 and 50 weeks average. Also if you look at, see this crossover has happened few weeks back here, and it is continuing since 2023 beginning. Right now it is still bullish. We have not seen any conversion. These are all running parallel. Support is seen with the 50 period moving average as of now. The 100 weeks average is at around 1860 levels, which is also again a good support. Stochastic is rising here. This is a bullish sign. MACD. Now see MACD on the weekly charts, what it has done. Let me show you here. See, this is one wave completed, or if you treat this as the wave, first wave, this is the second wave. Now it is started with the retracement here. This is the red side of this wave. A possible conversion here and crossover will lead to strong bullish momentum. Right now, if you look at candle size has started to diminish, and you can see the blue line is trying to converge here. So yes, a possible conversion from here may bring long-term or near mid-term bullishness here in gold. So I will wait for it to converge crossover. If it does show a crossover, certainly the bulls will take over from there, and hence possibly couple of weeks or more. That is what the month of September we have to just be watchful, cautious. It has to reverse. It is just taking its time, but let's see how far it can stretch the downturn. RSI is comfortable here. On the daily charts, if you now on the daily chart, see moving averages crossed over here, trading with divergence and bearishness. Also, if you look at right now, it is staying bearish, looking downwards. Third point is the prices were divergent. A bit of divergence was seen from the moving average. It has converged, but if you look at it, is still not the 100 period moving average. The 2050 is breached. I will look forward to a stronger momentum on the upside, which can take it above 100 period. Let the moving averages look upwards and crossover, and the bulls will take over from there. Yes, right now it is still staying bearish. You can see the slope of the moving averages. So let them turn upwards and crossover. Might take few sessions. See, stochastic was oversold. It is recovering here. MACD. Now look at MACD here on the. You can very clearly see MACD has seen the bottom here. With that as bottom, if you look at double top here, then lower highs right now are getting formed. So a breakout on the upside could yield stronger momentum. At the same time, right now, what has happened? See, one wave completed, second wave here is initiated, and the red side is just initiated. If it crosses over from here, so a couple of greener candles from here, possibly we can see the bulls taking over with the momentum there, and then it can show a strong up move. RSI is rising here. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy and summarize our objective. And before I provide you the levels, yes, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on first week of October. Limited seats are available purely on the first come first served basis. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now, see, to summarize our observation, first of all, 1900 proven out to be a good psychological support. We have seen gold taking the support from the same levels and bouncing back. We have seen inverted head and shoulders on the daily charts and 4-hour charts as well. And right now it is on the path of recovery. Now the major resistances on the upside is at around 32, 40, 50. These are three major resistances, then 65, and then we can look forward to 85 levels directly. Remember, any move above 85 will call for the bulls for the near term in gold. And it has a potential to rise. As you can see, it is forming flag formation on the daily and weekly charts. On the downside, yes, there is still a possibility. If it stays below 1900 and 1885 levels, we can see it hitting 1870. 1870 is the gap levels, and also the 20 weeks average. 1860 is around 50 weeks, 100 weeks average here. So these levels are going to remain a critical support for gold. As long as 1800 is respected, we can see possibly higher lows there if it continues its downward move, and from those levels a reversal cannot be denied. So now this is the summary of the observation. Let me give you the trading level. Now where to buy? You can buy here at 1926.5 levels, but then 1930, 32, this you should watch out for. Very good resistance exists here. If gold stays above 32, more bullish momentum may prevail. I will look forward to 1940 levels as the next milestone. Very good resistance. Then in between 32 and 40, there is a smaller resistance at 36, but I will be largely looking forward for it to breach past by 36 levels. Now beyond 40, 1953 is the next level, and in between also there is one milestone, that is 46.5. Yes, 45, 46.5, and here 36. These two levels will come into picture. However, largely I will look forward to these levels, and beyond this 1965, staying above 1965, largely I will be looking forward for it to hit 82 levels. Yes, these are going to be the next milestones. Beyond 82, certainly sky is the limit on the upside. Chances appears to be less that gold is going to break above 82 levels in this week, but yes, these are markets we have to be careful here. Staying above 1953, then 1965 zone, do not think of selling gold. Every dip is an opportunity to buy. Now on the downside, where to sell? I will recommend you to sell here at 1914 levels, but then 1910 first support, 1906 second support, 1900. Now 1900 is a psychological support here. It is not coming from the technicals, but 1900 is a psychological support, and below 1900 is where the bearishness might prevail. I will look forward to 1891, 1884, and below 1884, do not think of buying gold. We are looking forward to 1870, 1860, and 1850. Now this is going to be the major support zone on the downside. If it continues on the downside, this is the gap level, this is the moving average level, and below that further bearishness may prevail, but these are going to be great support, and as long as 1800 levels are respected, we are not going to treat gold as bearish. Possibly it may achieve higher lows. Even if it stays bearish this month and also next month, we may see it consolidating before looking forward to an up move. So take your positions accordingly, trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Do watch the twice a day analysis. Definitely it will add meaning to your day trading decisions. Thank you.